please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, Asian markets have opened up mildly lower. That's in fact following the mixed cues that we got from Wall Street. The Japanese index, that in fact was seeing some kind of selling pressure in early morning trade. It's down close to around 0.3%. Also keep an eye out on the dollar yen. That continues to hold below that 106 odd mark. So the yen is showing some strength over the last few trading sessions, holding its head below that 106 odd mark. But pull up the other couple of markets. The Kospi was down nearly around 0.5%. So let's see what's the recent update over there. It's still down nearly around 0.5%. And let's pull up the Straits as well as the Taiwanese index to see how both those two indices are doing just to kickstart trade. So fair to say that we've got a red start from Asia, and that would mean that the SGX Nifty would be starting off on the back foot. So maybe a 40-point downtick is what we could see. Remember yesterday as well, the SGX Nifty was indicating a far deeper, start in the red, but we quickly pulled all of that back. So today, 44 points is what it's suggesting. Let's see where we open up.
Okay, well, let's tell you about what happened on Wall Street then. US markets ended mixed. The S&P fell for what was the fourth straight session, and the Nasdaq also ended lower. However, the Dow did manage to hold on to gains of almost 0.5%, ending 115 points higher. Investors worry that other countries could retaliate by implementing their own tariffs on the US-made goods and sparking a trade war. CNBC's Hampton Pearson gets us a wrap of all what took place on Wall Street.
U.S. markets finishing the day mixed. The Dow up 115 points, the S&P down 2, the Nasdaq off by 15. Toys R Us will close all of its stores in the U.S. 30,000 jobs will be lost. The chain still sells more than $11 billion of toys per year, but it owes more money than it can afford to pay back. Hasbro and Mattel losing a major sales channel, both of those stocks lower today. Due to a sharp rise in home values, homeowners gained an average of $15,000 in home equity last year. That's the most equity gained since 2013. This rise also helped about 700,000 borrowers rise above water on their mortgages. And March Madness is in full force today. 16 games are on tap. A survey by Office Team shows 62% of workers will check scores while on the job. Last year, 70 million brackets were filled out ahead of the tournament. Good luck, everybody. That's the action from the U.S. markets. Back to you in Mumbai.
All right, then, turning our attention to the European markets. Well, in fact, in yesterday's trading session, those markets, they ended mildly in the green. We saw relative outperformance coming in from the CAC. That, in fact, was up close to around 0.5%. And for the second day running, we had the DAX. That was a relative outperformer, ending with a gain of around 0.8%. Remember, political instability is something that was plaguing those markets. Now, in fact, we have a coalition government. It's given Angela Merkel, it's her fourth term in office. And on the back of that, we have seen that that market's up nearly around 1.5% in the last couple of trading sessions.
Okay, let's tell you about the currency space then. The dollar is holding on to overnight gains as trade war concerns have eased slightly, and the focus has now shifted to next week's Fed Reserve policy meeting, which begins on the 19th of March.
And turning our attention then to the world of commodities and crude oil prices, they extend overnight gains after International Energy Agency said global crude demand would accelerate this year, but warned supply is growing at a faster pace. The IEA report adds that Venezuela is likely to remain the biggest risk factor among leading oil producers. So as we speak, Brent crude price is still holding mildly over that $65 per barrel.
Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Well, back home on the Lal Street, it was a range-bound day of trade until a last-hour dip dragged the indices lower. So we had the Sensex and the Nifty, which slipped 0.5% each. Heavyweights like Reliance Industries, HDFC led the decline. Mid-caps too slipped from the highs but outperformed the benchmark indices. Anisha joins in this morning to tell us what we can expect in trade. Hi Anisha, morning.
Hi Ekta, good morning. Well, yes, as you mentioned, range bound has been the nature of the market. For a longish bit, we have been stuck in the zone of 10,300, 10,480. And yesterday, as you mentioned, we were again facing a choppy day of trade. The Sensex and the Nifty falling about 0.5% each. The Nifty Bank at one point of time was outperforming, but it slipped in the last hour of trade. 150 points off the day's high is what it closed at. At one point of time, it was trading above the 200-day moving average. But the party, as you mentioned, continues in the mid-cap space because there, the advance decline ratio has been favoring the advances for quite a while. Even if you look at the fund flow picture, that also presents similar data that we have been seeing for a bit because the FIIs continue to sell in the cash market. Yesterday, sold around 700 odd crores, while the TIs try to support the market by buying in around 256 odd crores in the cash market. If you're looking for the global cues today, well, they are a tad bit mixed because remember in the US markets, Dow closed 100 points higher, but the S&P and the Nasdaq closed just mildly in the red. Now there are three key focus areas for the investors currently. Of course, trade wars remain the top of mind. In fact, we got statements from the National Trade Council director in the US, which said that US could implement tariffs on imports without causing a trade war. Now that also caused a bit of nervousness in the markets there. That remains an important cue for the Indian exporters as well because remember, late afternoon yesterday, you heard report from US challenging the Indian export programs. Fed meet coming up in the next week is also an important cue. Also, the Russia's involvement case in the US election was making headlines in the US yesterday. In fact, it was making headlines in UK as well because UK has now ousted around 23 Russian diplomats, the highest that we have seen in Cold War, and that's the reason that the FTSE tad bit underperformed in Europe yesterday, while the CAC and the French index as well as the DAX was doing better in trade yesterday. Asia as of now is a bit subdued. The SGX Nifty down about 30 points. Local cues include the likes of deficit data, which is better than last month but still remains a bit on the worrisome side. The important levels to watch out on the Nifty, 20-day moving average is just 30-40 points away from where we closed yesterday. The SGX Nifty right now is suggesting a downtick of around 30-40 points. But on the upside, the 100-day moving average of 10,460 is what we should look at. Maybe not today, but 200-day moving average of 10,180 is also an important level. Back to you.
Okay, all right, Anisha. But what about stocks you should be looking at for today's trading session?
Well, JP Associates will be top of mind because remember Rakesh Jhunjhunwala's rare entity has bought around 3 crore shares in the company at 18.37 per share. We have been hearing about it and the stock has been doing a lot better in the last few days. Now we know the reason why. JP Infra there, the promoter has released pledge on 6 crore shares. So that will be in focus as well. For future consumers, CARE has come out with a rating. They have reaffirmed A1 rating on 100 crore commercial paper, as well as they have signed a JV with Dubai-based Bin Abiyand Group for manufacturing and selling of cupcakes and pound cakes. A tad bit of positive there. Bharat Financial, they have completed the third securitization transaction of 450 crores. That should hold up in the green. Oriental Bank, they have made a preferential allotment to government for 3,600 odd crores. A tad bit of positive there as well. Alembic Pharma has come out with a clarification that they haven't done any buyback as yet, and they've come out with more details on that one. So that might be in focus. A lot of news for the IT space. While Infosys has successfully completed one of its projects in Malaysia, Majesco has got a new deal from the Raffles Health Insurance Company in Singapore. Zensa Tech has also extended the partnership with Microsoft in South Africa, so good news there. On the other hand, Wipro has completed the strategic investment that it was doing when one of the companies for over $2 million. Yes Bank, they have invoked pledge on the shares of Fortis Healthcare. That has been in the news for a while, so maybe a bit of reaction we'll see on both the stocks today as well. Imami Infra, well, they're raising NCDs of around 150 crores. The company has been debt-ridden, so a bit of more debt coming onto their balance sheet. Lastly, on Gravita India, good news coming as the company has received order of around 300 odd crores, so that should hold up in the green. Back to you.
Okay, Anisha, thanks very much for that. So that's what's likely to take place in our markets as well as the stocks in focus. Some alerts coming in from CNBC with regards to US President Trump, who is deciding to remove his national security advisor now. So there is more kind of attrition which is taking place in the White House.
Well, let's get straight to the big news point then. Just a day after RBI Governor Urjit Patel broke his silence on the PNB fraud, the Finance Ministry has reacted to it. Now, a top finance ministry official has responded to CNBC Awaaz on Urjit Patel's comments. North Block claims that the RBI has enough powers to regulate bank branches. Not just that, the ministry official said that the RBI is the only entity which has supervisory role over the loan account. The official also added that the government only has ownership rights over the banks and it does not interfere in its administration. Well, even as the war of words continue, here is veteran of the banking industry, the founder of ICICI Bank, asking for the blame game to end so that PSU banks can be fixed in all earnest.
The mess that has been created today in the banking sector is to a large extent owes itself to the fact that the banks have been under the public sector for 50 long years without any improvement whatsoever in their working. And I think Urjit Patel has hit the problem right on its head.
Do you think that we could retain the legislative framework but merely abolish the banking department and go ahead, or do you think the law needs to change?
Yeah, in fact, I would go for a very strong arm measure. I mean, you may say that I'm pretty old and I can take a very radical view of this matter. But in 1991, Mr. Narasimham did contemplate the idea that the government's ownership of government's control over the banks are no longer justifiable. If the government's control over the banks are no longer justifiable, I don't see any logic for the banking department to continue to function.
Okay.
I think the Reserve Bank of India should be the sole and only authority in order to supervise and regulate the banks. And I saw today a statement by Bimal Jalan, who said that if public sector banks are privatized, who will lend to agriculture and small-scale industries? I think for 50 long years we have been lending. And private sector banks are also obligated to lend to the priority sector, which consists of agriculture and small-scale industries. That is no longer the problem. The problem today is what Urjit Patel has said, that the duality of control will have to go. And if this ultimately in the PNB fraud, those who perpetrated the fraud, those who facilitated the fraud, those who had knowledge of the fraud or ought to have known the fraud existed, will have to be dealt with. But the larger issue of where does it lead us to, the larger issue of the autonomy of the public sector banks, I mean, that I think will have to be raised to the fore. Instead of merely going on debating as to whom should be blamed for this, whether the Reserve Bank of India should have known about this, should have prevented this, such questions are no longer relevant. I think we should confine our issue that those who are guilty will have to be punished. And move along in it. How are we going to stop such issues from coming up to the fore in the future? The only way in which you can stop it is to give that autonomy to the public sector institutions and have the right people there. And the only persons who can decide who are the right people must be the Reserve Bank of India. It can't be a whole lot of people.
Dr. Urjit Patel makes the same statement. He says public sector banks don't have market discipline. They are not worried that their deposits will be pulled out even if a fraud or a large NPA is created. So would you say, government stake has to come down below 50%? Is that the way out?
These two issues will have to be separated, Lata. One is the control function, another is the ownership function. I think Mr. Narasimham, I should credit him with this statement 27 years back, that you can segregate these two functions. It does not matter who owns the banks. What matters is who controls the banks. And today, it's not very clear who controls the banks. Is it the central government which is controlling the banks, or it is the Reserve Bank of India which is controlling the banks? Now, while in 27 years back, there is no problem whether the government owns or not. Today, I think it has assumed a further significance because it doesn't make sense for the government to continue to own even 51% or 60% of the banks. Because the government needs money for a whole lot of other purposes. Why should they continue to hold it? If they are going to give up control, I think they can as well give up that ownership. And so that means that amendment to the legislation.